Hello and welcome to Charting the Markets with me, Sean Mearson, Senior Market Analyst at IG South Africa. Today's economic calendar is looking a little bit bare, but we have had Spanish CPI data coming in better expected, as well as German GDP showing a slightly smaller contraction than was expected. We do have a busy week ahead, though, with the Bank of Japan, Bank of England, and the Federal Reserve meeting this week. So lots to watch out for and lots to be cautious of as the week progresses. Let's look at some charts. And starting off with the US dollar basket. Now that long-term trend for that dollar basket does remain up. So preferentially keeping a long bias to trades at this point in time. I'd say that over the short to medium term, though, we had this nice reversal. We had this move up. Thought we were breaking out, but it has petered out, and probably because of a very busy week of central bank activity. So over the short to medium term, I would say that we are sitting in more of a consolidation type environment. But because of that longer term uptrend in place, we're looking at areas where we could be buying. And so any types of pullback towards support and initial support somewhere between 105.70 and 105.00. We want to see a pullback there, maybe a bit of a bullish reversal, similar to what we had before, this bullish Harami type environment. Alternatively, we see a break of resistance. I haven't labeled it in the chart, but we could probably have a chart sitting about 106.50 as an upside resistance target. Resistance would be quite close at 107, but if we get through that, quite a distance to the next level of resistance. We have overhead resistance sitting at 108.50. Looking at the euro dollar, we have a similar picture, but obviously inverted, where we have a downtrend that is in place. Over the short to medium term, we do have a bit of a consolidatory type environment. We had a rebound. That rebound has ended with a bearish price pattern. We've had a move lower, fallen short of support, and we are grinding sideways. So same principle applies. We're looking to find short entry in line with that longer term downtrend that is in place. This has provided that 1.0690 stage resistance. That seems to be a major high for the time being. If we break above that, that could suggest, well, maybe we're starting a bit of a trend reversal. But until that happens, we're looking for any type of bearish signal. So not a clear breakout level on the downside here, but any rebound currently look to see it end with a bearish price reversal somewhere between 1.0630 or 1.0690. Cable is also sitting in a downtrend, very similar to that euro chart. Price firmly above that 200-day simple moving average. We also had that bearish price reversal, a trend line resistance just short of that 1.2300 mark. And that is a major resistance level. We're just drifting sideways in an interest rate heavy week or a monetary policy heavy week, central bank heavy week. So any type of rebound towards that resistance, failure of that rebound, we're looking for short entry and that market. Only time we start to change our bias, we can start breaking above this major high. We're sitting at 1.2300. Moving over to some indices now, and starting with the NASDAQ 100. The NASDAQ 100 has broken the 200-day simple moving average. That doesn't suggest that that longer-term trend is yet down, but it does say that longer-term uptrend may be broken. So could we move into a bit of a broad consolidation type environment, an environment where we no longer just sit with a long bias to trades, but we look at long and short relative to where we are between our levels. At the moment, we are finding some support at that 14,200 mark and in oversold territory. And that next resistance level there is sitting at about 14,565. Now, traders along might consider having a stop loss on a close below that major low there. Probably around 14,052. S&P 500. Similar picture, long-term trend has been broken to the downside. So we are sitting in a range-bound environment. We do have a bullish price reversal forming here, but I think to get long, we'd like to see a close above that 4,160 mark before we start targeting a move higher, about 4,250. And that would be this high here. If we get through that, then maybe 4,325. The Germany 40, long-term consolidatory environment, trading between levels at the moment. We're in oversold territory. We've got a bullish reversal around this 14,670 mark. We actually had a slight break below. this we get a positive close like it's trading right now, then we see 14,970 as that initial upside target, and could use the close below this reversal low, about 14,590 odd as a possible stop loss indication. FTSE 100 broke out of that very short-term consolidation we were talking about. Long-term trend is sideways. We're trading between levels. We're waiting for a directional bias. Very sharp move, quite a hard one to catch. Did find support at about that 7,260 mark, and we are reversing quite sharply. Also, if this holds up, suggests a bullish reversal from oversold territory. So we do want to see a strong close like it is trading currently, or a close above at least a halfway mark of that preceding candle before we start targeting a move to that 7,410 mark once again. Now, in this situation, with a long-bodied candle, it does make it quite a bit of a risk to reward. It is a bit tricky because we risk it if you get a stop loss below this reversal low, more or less the same as what you're looking to make. Traders might think of being a little bit more conservative, having that stop loss, close below the one-day low, if looking for a long position. Moving over to some commodities now. Long-term trend for oil is up. So the bias has been up. We did have this correction. We thought that correction had ended with this bullish harami type pattern, the pattern that's circled red on our chart. The price has actually moved sideways. So the first indication when you see a candlestick reversal is suggesting an end of a move in a direction. So here that move was down. This suggested the end of that. But it hasn't manifested in renewed gains for oil. I think what we want to see right now is that, well, firstly, we do have these long wicks, lower wicks to these candles. That is a slightly bullish indication, but we are sitting in the range between $87 and $91.10 per barrel. I think for that next directional guidance for long, we want to see that range break. So that would be considered a break. We get a close above or below. Close below, we'll be sit on our hands, waiting for weakness to play out. Break above could be a signal for long entry, targeting a move back towards that 92.70 mark. Spot gold. We've had a break of that 1985 level. So we've had an upside break, and now we are in overbought territory, and we do look like we're having our first bit of a pullback. So I think there's quite a strong short-term upside momentum. Some safe haven demand from escalating tensions or a war in the Middle East at this point in time. So the bias here, I think, is to be buying into a pullback, looking to see where that pullback ends. 1985, quite close. Maybe you could have a level there sitting about 1965. I want to see that pullback end with a bullish price pattern and engulfing a harami piercing line, anything like that, or looking for long entry into gold and targeting that move higher. In that situation, this recent high here, 2010 odd, would be that initial target, and through that, we're looking at 2045. Natural gas, we looked at recently. We had this bullish price reversal after this pullback, so suggesting the end of that move lower and suggesting move higher. The price has now reached that 35.85 target. And from there, we have a bit of a shooting star type formation, that long wicked candle, the top and this green candle. You put those together, you've got a bit of a harami type pattern and then a gap lower. So suggesting that we are in the midst of a pullback. That longer term trend is still considered up. So we're looking to see where that pullback takes us to before looking for long entry again. Now, that next level of support sitting at about 31.65. So if we could get the price nice a little bit tick back once we get to that could be a possible long entry, and then retargeting and move back towards that 35.85 mark again. But at this point in time, waiting on the pullback, seeing how far it goes, seeing if it makes it past the 31.65, maybe somewhere closer towards this trend line support might be an option as well. But we do want to see that the price is not continuing to fall. We want to see that you have that bullish reversal, the price starting to tick back, starts to change direction. Ending that pullback and suggesting a continuation of that longer term uptrend. Right, that's all the charts from me. I'm Sean Mearson, Senior Market Analyst at IG South Africa, and thank you very much for watching.